How's it going, everybody? JT here with the EV Mavericks DAO and the R Ethereum Daily General Discussion for yet once again an episode of the Doots podcast. Today is October 17th, 2025. This is episode 128. I have my newfound friend Noah Bortnick here from Carpathian Crypto. Say hello to the world, my friend.
How's it going, everybody? Great to be here today. Very excited to do this.
Super glad that you could make it. We had met each other at the HDAX exchange, the conference in Kansas City. It was so dang cool. So we're going to jump right into it, Noah. We had met through a mutual friend, actually a former guest of the podcast, a former, I believe, two-time guest of the podcast, Mr. Adam Bloomberg. Adam Bloomberg is a certified financial planner. I had actually met him in East Denver. Super sweet guy. And he got you and I and your co-founder together in a Telegram chat. And then we met each other at the actual conference, and it was such a pleasure to meet you. Let's go in just real briefly into your origin story, the aha moment, the rabbit hole. When did it start for you?
Oh, boy. The rabbit hole started for me about in 2016, 2017. I had various opportunities and thoughts of actually starting a crypto fund back in 2016, 2017. I didn't actually do that up until about 2020 when I started my very first fund. I was in college at the time and was just at the very beginnings of the rabbit hole for me. And then I actually started my first fund. We started originally as Black Box Digital in 2020, starting with a liquid token fund. The rabbit hole really started for me when I started to focus on DeFi and DeFi structuring products originally for myself, and then wanting to take those more high net worth individuals, clients, and starting to structure products actually for family offices. So yes, we are a crypto hedge fund, but we're not quite structured in the way that we're trying to be crypto degens, more so on a sustainable financial path.
And how has that journey been for you guys? Just say from a regulatory standpoint, from the previous administration to the current one, have you noticed a big sea change? Is there less friction these days? What's working for you and your company?
Yeah. So look, yeah, I mean, it's, as most of the people know, I'm sure that, yes, this is night and day difference from the Biden administration to the Trump administration. The Biden administration, of course, wasn't all that friendly to crypto and digital assets. But once you got into the Trump administration, the November of 2024 was probably the most, I would say, fun month that we've been in crypto. It seemed like all sorts of excitement. Products started to change from, of course, we got our ETFs, but even on chain. The ideas behind tokenizing funds, actually 100% of our funds are actually tokenized at this point. So we use we use various service providers to tokenize our funds. So it becomes a little bit easier for crypto natives to get into an actual regulated environment. So right now we're primarily focused on US based securities and creating compliant products there where there actually is a security backing. We are believers at this point that if you're going to be managing other people's money in LP capital, that it should have to be, you should put your name and your reputation behind all of those, and investors should have recourse. So we will go in, we'll recreate a number of products that you might see on chain. We'll verify various protocols. We'll make sure that we are working in line with the US regulatory environment. And then from there, we tokenize it in a security, and we'll create funds that are underlying with that actual backing. And you, as the investor, you will have very clear recourse, which I think is important for the long-term sustainability of institutional grade DeFi products.
So, what are some of the guidelines or the rails of tokenizing? How easy is it to do? What are the compliancy things that you have to deal with to make that happen?
Yeah, that's a really good question. I think that demystifying tokenization is probably a process that if you're a DeFi vault curator or you're a fund manager that you should really look into, because it's actually a very simple process. Typically in a fund, you have, your three main ingredients. You have your private placement memorandum, you have your limited partnership agreement, and you have your subscription agreement. Within those documents, it will outline exactly what it will say. It will reference the vault type, ERC 4620 vault. I believe I'm getting that correct. It will reference the token, and it will reference basically the basic vault security mechanics. We actually work pretty closely with a team over out of Switzerland called Fume Finance, and they tokenize a number of different products. They primarily are working with more European, Luxembourg-based funds. They're working with various security apparatuses. But again, we were primarily the first US-based fund to start working with them. The process is actually very, very simple. Again, you create those documents. You create those documents, you create your strategies, and then essentially you'll have a process where it's you click to accept the terms of the agreements, and you're able to subscribe via in-kind investments, or you're able to subscribe via your typical cash. We work closely with a number of different banks to basically that are in line with the crypto ecosystem.
Noah, when we met last, correct me if I'm wrong, I'm looking at your website here, but I remember when we first met, I believe you were talking that you had around 10 million under management, and that's grown to 150 million.
So yeah, I want to correct that, because we actually just redid our website. It's actually closer to 30. But
okay.
That number, we just redid that. So yes, I want to put that disclaimer in there. That needs to be corrected.
Well, it's up and to the right regardless. So that's good. You've tripled it.
Yes.
You haven't done a 15, but you did a triple. So congrats on that. That's fun. So you're finding some interest out there, obviously, and that's great.
Yes.
Go ahead.
But I think that with our products, the 150 million mark certainly within play within over probably the next 2 years. Right now we're focusing primarily on again that compliant vault infrastructure. Mm-hmm. So we actually just curated a vault that's actually structured as a master loan with L1 advisors. It's primarily focused on working with RIAs. So again, our types of products aren't meant to be they're not meant to be the ultra degen DeFi where you're trying to get 1,000% yield. We're focused on sustainable growth over, think of them more along the lines of wealth management products. So yes, we have fees associated, but we're looking at 10 to 20% yield on products that you're going to be able to manage over the lifetime of the lifetime of your crypto net worth. So that's our ultimate goal. And actually, you mentioned Adam Blumberg. We started working with Enclave and his group pretty closely, and they do an excellent job of creating that sustainable growth over for a high net worth individual family office, crypto family office. And so ultimately, we're trying to create the products to service those types of, I would say, RIAs.
So that going back to Adam one more time, I now exactly remember when I met him. This is coming down to the Kansas City side of things, and more broadly for people that are obviously not from Kansas City, but you've probably seen this in your own travels across the crypto landscape. I think it was like 2 or 3 years ago. There was a DAO formed called Planner DAO, and it was certified financial planners that met in Kansas City. And at that time, the room had maybe 35 people, maybe 40. It was small. And it was a bunch of certified financial planners that felt like at that time, now go back in time, we were under Gary Gensler. all the mom and pop certified financial planners, even the big boys that are certified financial planners, they couldn't figure out a way to integrate crypto. And all of their clients were asking about how they could get exposure to crypto through the various instruments. And they were like, we don't know. We can't do anything because we don't have the regulatory oversight to execute trades or whatever on behalf. There's the word, on behalf of our clients. So fast forward to today, we did the HDAX, the Heartland Digital Asset Exchange in Kansas City. They had to change venues to accommodate the amount of people that wanted to be at that conference, which was comprised of just a very few crypto natives, but it was a lot of certified financial planners and other institutions that are able to, on behalf of their clients, custody and handle assets and trades and all that kind of stuff. So what a difference between those two events. You know, everybody was just pulling their hair out at Planner DAO going, our hands are tied. This sucks. Because we know we're missing out on being able to earn fees on behalf of our clients, even though it's a risky asset. If they could at least have Bob and Alice get exposed to 3% of the volatility, you know, they knew it was another thing, and all the money was just. Well, I think the other part of it too is that how scary it is to self-custody, and you know, these mom and pop shops are like, let's figure out a way to, you know, get the regulations. Anyway, that's a long-winded way to say times have changed.
Times have definitely changed. First of all, for us to have, I'm from Kansas City, which is another reason that this is such an excellent opportunity to meet you, JT, and be on your podcast. But for us to have that event in Kansas City, I mean, that's unheard of. You know, normally I was just in Singapore for Token 2049, and it certainly wasn't Token 2049, but for us to have an event with allocators in Kansas City should just be an example for how far we've actually come. I remember I go to a number of the crypto meetups here in Kansas City, and that with that event taking place, there was a number of different projects there, a number of different institutional focused family offices from, you know, rural areas were coming into Kansas City. That's, you know, just enormous for the overall Midwest. And so, you know, I am focused on trying to raise capital from you know, Midwest family offices, as well as, but again, my focus is still on the crypto native side. So still maintaining that balance in between, okay, how do you bridge and get new family offices, new allocators from the Midwest onboarded into crypto, and then how do you still provide actual services that are attractive and, again, focused on the actual needs of long-term investors within the crypto native space.
I was trying to find, we got visited by the representative from Coinbase. He's a dapper young lad. I can't remember his name. He was like a vice president of product, maybe.
He was. I'm forgetting his name off the top of my head. Brian. He's the VP of Coinbase Global Asset Management.
That's it. VP of Global Asset Management. He was incredible. I mean, you just felt the energy in the room, and I walked away from that conference going, okay, like if you ever felt like things are here to stay. You really felt like things are here to stay. As volatile and crazy as, you know, a simple tweet from Orange Man can change things or whatever right now. This too shall pass. So it's a bright future. It's hard to understate that. And the Heartland Digital Asset Exchange, I felt so bullish on Kansas City. I don't know about you, but I walked away going, okay, wow. So Kansas City, I know it's a flyover state, and a lot of you guys are probably tuning out as I say that. Don't, because I think we're getting 2 or 3 AI data farms here, and there's going to be so much integration with crypto already. You got Carpathian here, but there's the people that are running the HDAX are finally in tune with some different leaders in the area. One of my favorite things they were talking about, it was the Bulla Network if I remember correctly, that was powering an exchange, and there was a tokenized trucking coin, which was a way for trucking companies to get paid. The basic way I can describe this, if you don't know anything about the trucking industry, it's massive. And the problem is a lot of most of it's mom and pop shops with like 15 employees or less. Obviously Walmart has their own trucking system and whatever. So, but it's like 80% of them are these mom and pop shops with less than 15 employees. And the problem is a lot of times they don't get paid for their services until 60 to 90 days out from the customer receiving the shipment. And so what these trucking companies have to do right now is they go to this one source for short-term loans. It's like a monopoly, and they have to pay a percentage on the loan. And it's just like how business gets done, and it rakes these trucking companies over the coals for fees and interest. And so what the Bulla Network, and I can't remember the name of the trucking company, the coin, they've already done 100 or 200 shipments already, where basically you as a token holder are fronting money and it's kind of like it kind of guarantees that the mom and pop shop gets paid within 48 hours of delivery, and then the token holders are made whole later on down the line. And I think there's an insurance aspect to it as well. So like token holders don't get burned if the cartels come in and steal the truck full of coffee or whatever. So, and that's a local thing. I mean, that's a local tokenized trucking company really doing real world stuff right now. I want to get them on the podcast too. But that was the biggest use case for blockchain. It's a decentralized lending program where mom and pop shop they're not paying 11% on a 60 to 90 day loan. They're paying like 2% or 3%. And anyway, yeah.
Yeah, the Bulla Network's awesome. We're actually talking to them just a little bit, but potentially about putting some sort of a managed pool on the Bulla Network, but as well, they have great trade finance opportunities that actually pay out in Bitcoin or pay out in whatever the opportunity is. And so, as well, those rates are actually secured by real world assets and real world opportunities, and so they pay out at a higher rate. And so if you're looking for actual opportunities backed by real world assets, and I'm incredibly bullish on the real world asset opportunities that are out there right now, and I really do believe that that's the biggest and next frontier of probably bringing non-traditional institutions on chain. And I think that is how you mainstream a lot of the crypto native opportunities, to the point where you're using the blockchain and you don't even realize why you're using the blockchain. Exactly. Other than you are using the blockchain. And so on top of that, they're great financing opportunities. Sure, there's different risk metrics, and there's different there's new forms of risk, but you're backed by real world opportunities, and you know that you have recourse if something were to go wrong. And that the recourse area is an area that I think that blockchain and on-chain opportunities needs to really improve over time.
We're talking to Noah Bortnick from Carpathian Capital. You can find them online at Carpathian crypto.xyz. Noah Bortnick. You can also find him on Twitter and Carpathian Capital's Twitter handle as well. Make sure that you like this podcast, subscribe to it, and you can download it to your favorite device across any of the channels that you so choose. Paul, down in the audience here on Discord, he says, Noah, FYI, it's a law that after the Doots, you have to come hang out in the daily discussion. So he's talking about the daily discussion thread on Discord. The EV Mavericks Discord is a mirror of the Reddit, our Ethereum daily general discussion. So if you want to like plug into a really tight knit well-versed community, these EV Mavericks are where it's at. We're a small pride in terms of NFTs, but we have a wealth of experience. Some of the greatest people that have walked the Ethereum landscape adore those things from back in the old Reddit days. It's cool.
Is that I know the R Ethereum channel on Reddit. I'm not, unfortunately I'm not as well versed in the Reddit world as I should be. But is that, how do I get there? Is that just on Reddit?
Yeah, reddit.com/r/Ethereum. It's the largest Ethereum crypto sub. But what Paul is referring to is actually this Discord also has its own daily discussion. So you got two places you can get information. It's a bunch of like-minded, aligned people. It's so the Discord has, it's the complement to the Reddit side of things. So if you're an avid Discord user, it's a great place to learn too. And a bunch of us are just Reddit junkies. But the EV Mavericks DAO lets us host this podcast on their platform, and I think it's super cool. It's a lot of fun.
Yeah, definitely. Would love to jump on there. Is it a live chat? I have one meeting after this. Can we push the daily chat back an hour? But yes, I would love to jump on there.
It's a 24/7 channel. You just slip in there and start talking anytime. Yeah.
Amazing. Yeah. I would love to jump on and become more part of the community for sure.
One more thing I'll say about the Heartland Digital Exchange. I want to get our Maverick, one of our best Mavericks there, and that man is Paul Brody. And I think I could talk Paul Brody to come. He's the global blockchain leader for Ernst & Young, and he's a guy that knows how to work a room. I think he would be fantastic for that conference and a bullish person to bring in. Why Casey? You're in the mix. You've got a bunch of Bob analysis. Some are local, I'm sure. What makes KC all of a sudden? It seems like there's more and more activity around crypto. Am I just in a bubble and I just feel like, oh wow, we have 2 or 3 things happening a year here. They're small, but do you feel like it's bubbling up and we're going to get a big show like ETH Denver someday?
Well, that's a great question. I think. Why KC? Well, first I'll start by saying I'm from Kansas City. I was born here, went to high school here. I've lived here my entire life. I went to the University of Kansas after that, so I love my Jayhawks. So it's home for me. That's number one why I'm here. My family's here, and so it's important for me. I have a very strong family unit to stay here. But do I think Kansas City as it pertains to crypto? Well, I can tell you there's one very large fund who has a founder who's from here, Byzantine Capital, who's actually an advisor to our fund. And I'm very good friends with Mark Zhang over at Byzantine Capital. And so he is, I will say, in the Kansas City side, he's definitely a curator and a mover of getting more funds here. And so as well as there's another fund, Ronin Digital, who's from Kansas City as well, on top of mine. So the three of us, we all work pretty closely together. There is definitely I would say, more of a crypto community, starting to pop up. Whether it sustains, we've been through enough cycle of this, as I figure most people listening and most people on the podcast are. I think it's going to be interesting to see when, whenever there's, not, a 2-year period like we've had over the last 2 years, or, whether it stays, whether it goes. My bet is it stays, because look, the financial opportunities on blockchain are significantly they're significantly more efficient than they are blockchain, whether it's financing yourself or whether it's whether it's the actual utility of blockchain. For me, it's tokenizing funds. So do I think Kansas City gets a big conference? I think, JT, that's something we're going to have to push for. Yeah, I think we might have to get organized and start to do that. Look, Denver's not that far away. Right. ETH Denver's a blast. I love ETH Denver.
I love ETH Denver too.
it's a great conference and people come all over the world. I would love to see us get something like that in Kansas City. But to be honest with you, I really do believe it's more going to come from the institutional front. There's a ton of money sitting around here that's just waiting and begging for the opportunity to, even if it's just stable coins, to get stablecoin yield on chain. And so I think truthfully the approach right now is getting those, some of the more crypto forward thinkers or forward crypto thinking, I'll say high net worth individuals and entities on chain, and then we start to aim for more of the ETH Denver type of feel. That's just my gut initial feeling. Plus, I like traveling, so it's always fun for me to get around places. But I really do hope we can have more events like we had HDAX here. Mm-hmm. That was definitely a step in the right direction.
To that point, ETH Denver is more like almost the crypto anarcho club in a way, and then like not anarcho, just what is the word? Sovereign something. I mean, it's like very artsy and whatnot. The HDAX that we just went to is very white collar, black tie kind of stuff. So maybe there's an angle there that Kansas City could fill that niche. Another person that talked at that was wasn't she the former chair of the Federal Bank of Kansas City? Was it the Federal Reserve of Kansas City? Yeah. What is it? What's her name? Is it the Federal Reserve of Kansas City?
I can't remember if it was Kansas City or St. Louis.
But it was Kansas City. Yeah, it was Federal Reserve Bank of Kansas City. So you hear Federal Reserve Bank and somebody coming to the HDAX, and I was like, what's this going to be like? She was the most bullish on tokenizing everything of just about anybody in the crowd, including the Coinbase guy. She sees like the dollarization in a digital form with stable coins as like imperative for the United States to capture. She was incredible to listen to also. I forgot that she was there. And I was very, because I thought maybe she was going to be more from a TradFi angle and a skeptic angle. No, she totally gets it. She was the former chair, and I think she was the chair for something like 15 years at the Federal Reserve Bank of Kansas City. So that was kind of a heavy hitting. Yeah.
I don't know what there is to not be all that bullish on when it comes to stable coins. They are pretty centralized as they're obviously very centralized, and so the government can easily track stable coins, and they're able to keep track of them.
Yes, I've always said it's like blockchain's a wet dream of the IRS.
Yeah. Let's it is definitely the whenever the IRS can figure out how to track stable coins, or figure out how to actually successfully and I'm going to say efficiently be able to track on-chain gains, we have a problem.
Yeah.
So I'm a believer in of course do your tax strategy as efficiently as possible. There's rules and regulations for a reason. But definitely once they're able to figure out how the blockchain works, yeah, they're gonna look into that. I'm sure of it.
Going back to Carpathian, what chains do you support tokenizing assets on?
Right now we're primarily on the EVM chains. We're pretty chain agnostic. We will look for opportunities. So if there's an overwhelming, whether we're talking to an RIA, an allocator, a fund of funds, a family office, we're just listening and trying to really observe any of the opportunities. We have teams that are of course we're a team of 3 to 5 at any given time, between me and all my partners, and so we do divide and conquer quite a bit of work. and we outsource to crypto native service providers. So again, when it comes to tokenizing assets, usually our go-to right now is Fume. I am a fan of other tokenization providers, whether it be Upshift or Midas. I haven't tokenized anything with Midas yet. Hopefully that will be something in the near future. But again, there's a number of different other providers. Like we're working with L1 advisors pretty closely right now. We just launched a new, it's actually I may have mentioned this, but a tokenized master loan vault, essentially, that's a tokenized product. I think that in general, you're going to start to see ETH primarily be the main tokenization blockchain right now. It's really not close. The opportunities are on ETH, even compared to some of the layer twos. They're just, look, ETH is DeFi right now. We like to look to Solana, but there's really not a lot of, I would say, well-vetted opportunities that you can really look at right now. So again, we're tokenizing probably on ETH and maybe some of the layer twos, but for the most part, it's really going to be Ethereum over the next, I would say, 2 to 3 years. Transaction fees are not.
Go ahead, Logri. The Bard is our technical interviewer. Go ahead, Logri.
Yeah, I'm curious. What are some teams that you are most excited about that you've helped invest or tokenized in the past year that you think we should have on the podcast and talk about what they do? Because there's a lot of apps. I don't feel that there's a lot of exposure or means to exposure for a lot of them. So what do you think is a really novel thing or two that you've seen that we've seen launched in the last year that should get more coverage than it's getting?
That's a great question. So teams that we work with or teams that overall?
I'll take either, but teams that you work with are teams that you could definitely connect us with and say, hey, here's a podcast to get you guys some exposure and to talk about what you're doing and what makes it special. And this is the platform for that. Yeah.
So I would say there's 2 teams right now that I like a bunch, and I'm going to actually put 3. I'm going to put 3. So again, we tokenize very closely with the Fume Finance team. They probably provide the best overall infrastructure that I have seen from vault providers, and they focus very closely on curtailing and curating very specific products to the needs of both the manager and the overall end user, in this case, the limited partner, investor, subscriber, whatever that is going to be. They do not have a huge following yet on Twitter, but when it comes to
some exposure and to talk about.
Sorry about that. Go ahead.
No, you're good. When it comes to overall exposure, I mean, they provide a very good service, as well as they're able to help set up various entities for fund managers in a very traditional way that comply with crypto nativity. I know you guys have had Enclave on quite a few times, but they really are excellent at what they do, and so I've enjoyed working with them. The second's got to be L1 Advisors. I think that they are overall. We've worked closely with them over the last couple, I would say 3 months. I'm very, very excited about what they're doing. The reason I'm excited about what they're doing is they are focused again on creating those products that are for specifically people like us who live on chain, who are mostly debanked, and they are here to create products that are overall for our long-term wealth. And I think that those types of things or those types of projects are specifically meant to help us in our financial situation over a longer period of time. And so those are the products that I'm most excited for. I think when it comes to exposure, they're definitely getting up there, and I think they would be interested in speaking, a bit more about what they do, and would happy to make. I know I can certainly make the connect with the Fume guys and the L1 team here, as soon as later today, because I do think that they would be interested in speaking more and getting more growth from crypto native high net worth individuals, like I'm going to guess many in your audience are.
Excellent. Logri, do you have any other questions for Noah? He's rocking the
No,
baby.
those are two good ones, of course. Let's connect after the show and just so we can network with them and see if they'd be willing to come on and talk, and we can get them in the schedule. The other questions I would have would be on the retail or in the office investment side. So we've got a lot of DATs that have come on board that now give retail exposure, and basically the goal is to compound the underlying asset. Do you think that there is your fund is more focused on we're going to take dollars and increase your dollars, right? Like the payout for you isn't fiat, right? And good.
So are you asking how we take our fees?
No, I'm saying from the page I saw, it's like a accredited investor would start with a $500,000 loan to your fund, and then you would go and invest that throughout crypto, kind of as a financial advisor would do, right? It would, but I don't know if there's much what you're seeing. Is there any interest from the type of customers you're talking to in things like that, in things like ETH, or is it all just we don't care what it is? We just heard this crypto thing is hot. Can you make us some APR in that? Do they care about any of the underlying details? Do they care about what L1 it's on? Is this actually any type of onboarding funnel for knowledge or understanding, or is this just a new avenue to allow people to make money on a new asset class if they choose to do so without having to know anything about it?
That's a really good question. Look, the first part that I'm going to answer is it okay if I answer this question in parts for a second?
Well, I asked it in parts, so that seems fair.
So again, my fund is only focused on major assets. We're focused on Bitcoin yield. We're focused on Ethereum yield, stablecoin yield, and we're focused on Solana. And then there has been quite a bit of interest from some of the newly emerging XRP-Fi community, I should say. We're chain agnostic. We focus on all sorts of different chains, but there is the most interest in single asset exposure right now, and that's coming. I would say, we're limited on the amount of retail investors we work with right now, just because, again, we try to follow the regulations, and you have to follow certain accreditation processes from when they directly invest into us. When it comes to if you are a retail investor, there's a number of, again, I would say that there's RIAs out there that are actual registered investment advisors that have a little bit more discretion that we do work with directly, and they can allocate based on how they feel fit. The average investor we work with, they absolutely want to know the risk associated, what's the overall strategy, what's the track record, what, and overall, what is the infrastructure. And so there is absolutely an education process. In fact, I can definitely say I have never had a scenario where I meet with a potential client once and boom, here's a check for 250, 500,000. That almost never happens. And if that does happen, and if you know anybody like that, please send them my way. But I still wouldn't necessarily just take their investment. I actually have a individual right now who very much wants to just give me the money and then forget about it. I'm not quite like that. I want them to understand the investment. I want them to understand, what are my skill sets? 'Cause I don't want to overpromise and underdeliver. And I definitely don't want them to think, oh, okay, 5-10 years from now, there's going to be no periods of the volatility, that there's going to be no periods of up and down periods. And I want them to actually understand what is going on. And I want them to understand why the blockchain is a better use case, because my end goal is to get my end goal, of course, is to grow my own income. But my main end goal as it pertains to some of the crypto native investors as well as retail investors, actually to get them to understand the strategy and to get them to understand the product. So I very rarely will just take somebody's, $250,000, $500,000 check and just say, here it is, you'll get your statement in a month. That's just not how it works for me.
That's good. You're teaching people how to plant trees.
Well, it's very easy for people to be happy when everything is going 100% and exactly as you planned.
Right.
But so we've been doing this now since 2020. That has maybe happened for like maybe at maximum a 3-month period, and then there's okay, we have to decide and shift. We have to make an adjustment here, and you need to be prepared both as a manager to make any of those adjustments, and then as well as a manager, it's your job to make sure that you're setting your investors up for success as well.
Has your phone been ringing a lot this last week? It has, but again, we don't do anything that's so risk on to be good.
overly concerned about. I just don't need you don't need to risk of shitcoin A and shitcoin B. You don't need that type of risk to be to make some real life-changing money in this space. What you need is
just leverage. Yeah, you can just leverage on the.
Yeah, I know you can. So we actually did get a bunch of texts, and I was getting messages from people over the place that you guys survived. Did you guys make it? But we don't use leverage, and leverage is in my opinion,
Yeah, it was a joke because leverage more often ends in tears than upside. But right. Around these parts, people like their 20x or 50x leverage, and surely that's if you don't want to play with the meme coins, right, then just play with the large caps with leverage. That'll certainly work out.
Yeah, leverage.
I'd rather just go play baccarat.
Right.
At least if I'm playing baccarat, I know that there's a legitimate 50-50, not a 2% chance I win.
Leverage traders over the last week be like.
Yeah, this market's been choppy for sure.
But I think it's Go ahead. Sorry. So
there's a good number of what I call yield indexers now. There's SummerFi who we've had on. There's Tokamak. There's Yearn Finance is a very old one, but Yearn V3 is now something of a yield indexer instead of a single strategy. Is what you're doing essentially the same sort of thing? So if people want single asset exposure, that's basically what that provides: single asset exposure plus yield, right? Mm-hmm. If you want single asset exposure plus yield plus speculation on that yield packaged into one, there's basically the DATs, right? I could go buy Bitminer, and now I've got the MNAV premium to speculate on top of the ETH they're holding, right? What is the real value add for what you are doing compared to those two options? Is it that's treated as a loan, so you don't have the MNAV premium, then you're dealing with a sort of fiat on-ramp and off-ramp, so people don't have to worry about their own custody? Is that the majority of it?
So first of all, I mean, when it comes to what's our value add? The main value add has to be that it's an actual managed product. So we have a number of different managed products that managed funds, I should say. They're not all just loans. Some of them are direct investments, so you actually take equity in an entity. But the first part has to be we're very focused on compliance. We do everything from you invest in a very compliant vehicle. Again, going back to the IRS comments, we create and we work with the various fund administrators that put together very compliant tax reporting packages. You're able to see your NAV in real time. We manage the risk. We make sure that we have the top of the line basically tooling. We work very closely. Another great company to have on is Octave. .fi. We work very closely with their team, and so I'll make that connect as well.
If you go to compliance often means a bunch of forms are filled out, and there's a lot of transparency reports that have to be followed up with, so people can keep track of where the money is. it's a little redundant when you have the chain, because the chain is basically a 24/7 live report of everything, right? So the full value of the compliance, I hear you, and of course that's necessary to be a U.S. actor doing what you're doing, but it's not really a value add from a reporting perspective because of the transparency of the chain, right? Is it a value add to your customers only if they are limited somehow to only invest in these compliant vehicles? If they could just take their money and put it on chain and throw it into tokamak or something, that would still be basically single asset exposure plus yield. There's controls on what tokamak can do with it. Those are built into something like the smart contract as well, right? So they can't go and take your money out of a position and yeet it into a meme coin or something like that. That type of mismanagement is just impossible. So what? Go ahead.
It's maybe not possible, but I would on the first part. Look, we're managing and we're distributing across a number of different chains. We're meeting with the teams. We're taking the time to really vet these protocols, as well as we're implementing, various strategies that they would comply with, of course, what the overall, whether it's an ETH strategy, whether it's a looping strategy, whether it's like we're looking at the actual protocols and we're really trying to understand what the risks are, as well as we're negotiating various agreements with protocols themselves, whether it's a points farming strategy, to ultimately come up with the best possible yield that we can come up with. And so yes, you can spend the time, I suppose. Look, we like to keep our strategies simple. Simple is always good in this space. And so yes, you can allocate to term max, or you can allocate to yearn, but there's a number of different emerging opportunities that need to be vetted. And so what we do is we handle a lot of that vetting. And we make sure to do DD, and then if it looks like a good opportunity out of the fund, we'll start to allocate those assets within, the overall fund. I would say when it comes to allocating, I would look very, very closely on who the managers of those underlying vaults are, because there are managers, and I know a lot of them are smart contracts. But just as an example, we launch vaults quite frequently. There's whether it be, we've used Lagoon in the past, whether it's launching a Lagoon vault, it's actually not, a lot of people don't realize that there's an underlying manager that is, moving those assets and managing those assets despite, you deposit it on chain. I would look into what the overall.
But the smart contracts for the yield indexers will have something that says, like, here are the whitelisted opportunities the money can be moved to, and that'll be subject to some like a governance vote, right? Or that'll be subject to controls from a multi-sig, etc. So yes, they need to be able to adapt to new opportunities, and so just like you, their job is to vet those new opportunities in order to chase that yield while also being smart about risks that they're taking, right? That's their livelihood as well. And the security controls on that aren't just if we go and do something unsafe and we misvet, then we'd be subject to the U.S. court system. It's basically, if we want to change the underlying opportunities the vault can be, the capital in the vault can be deployed to, there's a time lock on the contract. And so if they try to do something really zany, that'll get picked up and blasted across Twitter, and you'll have the opportunity to get your money out before your money can be moved into the new vault, once the time lock period would end, right? So it's on-chain smart contract controls that prevent malfeasance, at least at a duration of beyond like a couple days, right?
I do agree with you. I do agree with you on that point for the most part for well-vetted protocols. And I think that to that point, we only work with audited protocols. It's just not worth the risks involved. Look, we're not trying to take away from what many of you guys can do, but our job is to consistently find those new opportunities and look across.
I'm not. Yeah, just to clarify, I'm not trying to be hostile. I'm just trying to understand where you are in a spectrum of opportunities, right? So there's like DATs over in one spot in the spectrum. There's like leverage DATs a little further to the right on the risk spectrum, right?
Sure.
There's something that's just holding ETH in your wallet on the far left-hand side of the spectrum, right? Of the risk spectrum. And where are you? Where are you in that spectrum? So I'm just asking these questions to kind of to trying to say, are you right or left of this? Are you right or left of that? I'm not trying to be a hostile interviewer.
Well, no, you're good, and I wasn't taking it as hostile. I genuinely enjoyed the conversation. The where we are, we're the curator of many of those vehicles. So I would say we're closer to the DATs, if you will, and so we're curating DATs within those opportunities. And so if you have a DAT, that their main treasury is creating yield on top of those, we're essentially just going through as a smaller fund, and we're finding more nimble opportunities, if you will, without sacrificing, some of those protections like custody, for example. I know a lot of people use Safe. We leverage Fortify for our custody, and so we're just focused, I would say, more so on creating the compliant side of DAT, if you will.
Well, it's DATs without the MNAV speculation, right? DATs are free to put the money in yield opportunities as well. We haven't seen them do any aggressive things with that yet. Like I know SBAT's just doing staking, but I haven't seen Bitminer or someone go like, we're going to gearbox loop this thing 7x and get our 10% yield. I haven't seen any of that do that, even if it's possible. So it's structurally, you're doing the same sort of thing as a DAT, trying to get single asset exposure plus yield, but without the MNAV speculation layered on top of that on the capital layer, right? Which is a risk, right? So it is objectively one less risk than a DAT.
Yes, I would say so. Our end goal of all this is we're on-chain asset managers. We want to be 100% on-chain. So we will create a number of single or I would say multi-asset as well if there's a mandate out there for it. But again, our focus is on primarily on those single asset opportunities right now with yield.
Hey, Noah, I know we're coming up to a hard stop for you because you got another meeting to jump to. I wanted to ask you real quick, what's the minimum amount of money somebody can deploy to Carpathian?
Right now, let's see, on the new fund that we launched, or the new opportunity on L1, I believe if you're working with an RIA, I don't believe that there's actual minimums there. In terms of our private funds, private offerings, we have 100,000 minimum.
100,000 minimum. Okay, there you go. So now we got that out of the way. What else do people need to know about you and Carpathian before we reach top of the hour or the bottom of the hour here?
Oh, that's a great question. I would say I'm happy to chat. A bit more on anything. I'm happy to give my email out as well as my Telegram if anybody wants to chat, a bit more. I would say Carpathian, we're on a very good path right now in terms of attempting first to scale past 50 million and then hopefully to 100 million within the next couple of I would say next 2 years. Our goal is to curate a number of vaults, a number of I would say compliant vaults within the US, and hopefully you'll be seeing those start to come out on some of the major protocols over the next hopefully quarter to 6 months. And so if you have any interest in learning more about some of the opportunities there that we're offering, happy to shoot you some more info, and please feel free to reach out, and I will of course join the fireside chat as well, and look forward to chatting with you more.
Excellent. And Logri the Bard is from tokenomicsexplained.com. You guys need to get in each other's DMs and share that information. I
sent you a friend request on Discord.
There you go.
Awesome.
You'll find Logri.
That's it.
He's so very knowledgeable across a variety of things. He's probably going to end up being a consultant with you down the road. I'm not even joking. So, and then finally, and most important question is what's your favorite barbecue in Kansas City you would recommend people to come to, and why is it Joe's Kansas City?
No, it's JT's backyard. It's not Joe's Kansas City.
No, you're exactly right, JT. It's why is it Joe's, and it's because it's not close. I mean, you have a million pop-ups popping up, but you don't have any. None of them can touch Joe's ribs. So
yeah, there you go.
If you're coming to Kansas City, although this is not the second time I've heard about JT's backyard, so it sounds like. Are you smoking him on a Traeger right now, or what?
We need to tokenize a food truck for him. He comes to these conferences for crypto, and he's always making barbecue. So we need to get him a food truck. He can drive to the conference and make the barbecue from the food truck.
Let's go.
We'll just call it JT's backyard.
JT's backyard truck.
I'm looking for my 10% yield on it.
There we go.
Come on, JT.
Yeah, I pay out in commodities.
I want to stake it, and I want to get the proceeds from the ribs. Let's make some Web3 money.
No, to answer your question about what do I cook on, and a lot of people are shocked when they hear this. Shocked Pikachu when they hear this. I was given a 55-gallon ugly drum smoker 15, maybe 20 years ago. And I've never upgraded anything except for the thermometers on it. It's a bulletproof thing. If you look up ugly drum smokers, and it uses a Weber lid on top, the damn thing looks like something out of a Dr. Seuss book. And it's the cheapest smoker, and I feel like the most effective.
It looks a little like redneck engineering.
It's sketchy as shit. But I drive that.
Those little drum smokers are great. They create some great smoked meat. Have you been out to the Shields out in I can't remember, Leawood?
No,
they're always selling them up there. So yeah.
No, I make
the secret ingredient for JT is not the smoker though. It's not even the time. It's love. Right?
It is all love, man. Yeah. So I Denver last year. I did 6 pork butts in that one smoker.
Really?
Yeah. It's insane. But if I got a food truck, I'd put a Southern Pride on there. I would never look back.
if you're up at ETH Denver this year, I'm gonna have to come try it.
100%. And I'm trying to put a bug in your ear. If you know anybody that wants to sponsor a barbecue at their Airbnb, send them my way. Is that generally what I do? Is I just kind of ask for a donation of around $15 to $20 a plate, and I always do pulled pork. I do a homemade coleslaw, and then bread, beans, and chips, and all the cutlery and napkins and plates and everything. And if people, that's all I charge, and I can do about 120 people max.
Well, we would look into sponsoring the barbecue.
And then the side quest would be, if I don't get a direct sponsorship at one Airbnb, I could just lay down and work at an Airbnb and then distribute to smaller parties. And I did that last year. So I did Pistachio Fi, and I did Green Pill, and I feel like a third party too. We sent some barbecue to them, and I didn't even have any association with them. And then I gave some to my Uber driver. I sent him home a huge pan of bean stuff, and he got teary-eyed, man, because they're fucking hungry. He's like, I got a whole family at home. And he's like, this is gonna feed us for like 3 days. I'm like, go get it, boy. So there you go.
That's awesome.
Yeah,
that's awesome. I'll contact you about that, and I probably know of one other company too that would be interested in sponsoring.
Well, and then
so
yeah, and my backyard's here too, so we could just not wait till ETH Denver also.
Yeah, no, we could do that as well.
Awesome.
We could do that. I'd love to try. Hey, thank you for your time.
Thank you.
And I appreciate meeting you all, and I'll be active in the Discord here shortly.
Awesome. Well, thanks again, Noah Bortnick, everybody from Carpathian. I keep saying it wrong, I know, but Carpathian Capital Management. You can reach out to them at carpathiancrypto.xyz. And all right, my friend. Well, go ahead. Got a final word?
Thank you. No, I appreciate your time, and this was a blast, and I appreciated the tough questions. I love tough questions, and hopefully I answered those thoroughly. And if not, please feel free to reach out to me.
All right, thank you again, man. All right.
Thank you.
And with that, we're going to move on to the second part of our show. No, you can stick around if you want. If you got to leave, you can just do an Irish goodbye. But this part of the show is called Daily Doots. This is where we're going to read out all the greatest comments from the daily general discussion from the last week on our Ethereum. The Weekly Doots live stream is all about showcasing the best of the week. And this is a read-along reaction series. If you want to follow along, head to dailydoots.com. Designed and produced by our very own Henny Abu. Big thanks to Tricky Troll for capturing and curating each day's Doots, and the A Word for curating this beloved weekly list. Make sure to subscribe to us on all your favorite platforms by visiting dailydoots.com. And as always, if you know somebody that wants a piece of this action, send them my way. All right, here we go. Morning roundup. Old School 47 chimes in. Ethereum is the GOAT chain. That's a fact. Frank the Tank gives us a price of $39.15. I don't think it's that now. And the ratio is at 0.035. A weekly haiku courtesy of JS Tears. And Armageddon, leveraged positions gone. Are you winning, son? Oh, man, how does he do it? JS Tears with a daily haiku. The weekly haiku is a banger this week. In our ship post of the week, because we always like to save the best for first. This comes from user +1 run. +1 run. Oop, I got to change my settings here on the old Reddits because I can't see because I'm not in old. Hang on one second. I got to get this fixed. This is going to drive me nuts because I always like to read out the Doots scores. All right, let me fix this in the preferences. Take this new Reddit crap and get it out of here, son. Get it out. All right, it's gone. Let's try this again. Ship +1 run for this week is a Duder number 3. Bless me, Almighty Crab, for I have sinned. For too long I have worshipped the bull, a false idol, entertaining illusions of moon. Eternal is our eastward journey. That's a great ship post of the week, I have to say. Great job there. Ship post of the week +1 run. Moving on down the list, random. Oh, you know what I didn't do? I didn't get the leaderboard. Our leaderboard for this week, Aiden Cairo at 118, Ethical Trade at 118, Crypto Owl Currency at 127, JS Tears at 130, at 134 is Hani Abu, Tricky Troll at 164, Benito 2030 at 176, Superfizz at 233, Logri the Bard climbing up at 240, and Harod climbing up some more at 271 at the top of the leaderboard. I will also take this moment, a little bit of alpha for you all. Hope you're listening. Hope you're looking at my screen here, because for the first time, you're going to be able to mint a POAP. If your name is on the Daily Doots list, you can enter in your Reddit username exactly how it is spelled with all the capitals and all that stuff. Find your name and then mint your POAP. So we got a gold tier, the platinum tier. These are the people that have had over 100 Doots. Whoops, I just got rid of the wrong thing. Let me reopen the closed tab here. And back it up. Gold tier is like 50 or more, silver tier, and so on and so forth down to bronze, and then the participant tier. And yeah, we've got quite a few people on that leaderboard. We have 1,258. I'm not sure when the snapshot was taken, but have no fear, my friends. Have no fear, because you too will be able to mint your POAP even next week or next year, right? So we're going to probably do this annually. So if your name gets on the list, you'll be able to mint your POAP. And how cool is that? Okay. Beautimus. I think I'm done rambling about that. Let's get back over to our weekly roundup and move on down the list. All right. Random Zilean Main, user Random Zilean Main, did a write-up on a recent TradFi adoption, Duder number 14. Did some data analysis and wrote a piece on recent TradFi adoption. If anybody is interested, there's a link here. Let's open up this link, tokenization of assets. Here it is. It's Dewey P979 Substack. Looks like we got another writer in our midst. For more than a decade now, traditional finance and decentralized finance have grown in parallel. One brings scale, public trust, and regulation, while the other brings 24/7 markets, programmability, and open access. That's a good sentence. I'm going to read that sentence again. That's a really good sentence. TradFi versus DeFi. One brings scale, public trust, and regulation, while the other brings 24/7 markets, programmability, and open access. This isn't just a proposal in a VC deck or a forecast. Treasuries, bank deposits, and stable coins are already being issued and traded directly on chain. At the same time, open protocols are adopting the compliance and risk frameworks that institutions demand. The result is a hybrid system where the boundary between traditional and digital markets is fading. This is also more than, quote, crypto becoming more regulated or banks experimenting with new tech. It's the slow rebuilding of the financial stack with programmability and settlement speed at its core. And I'm going to stop right there. You can check that link out at dailydoots.com. Dewey P979, whose Reddit name is Random Zillion Main. All right. Couple of takeaways. The stablecoin market is now over $300 billion in value, or around 10% of physical U.S. dollars. Wow. Institutions getting involved in tokenized deposits, stablecoins. For example, just today, Citi Ventures making strategic investment in BVNK. Tokenized stocks growing massively in the last 30 days of 190%. That's a pretty key figure. Tokenized stocks grew 190% in the last 30 days. Fantastic. Let's go. All right. User Rhythm of ETH, old timer, shares the postmortem of the Kiln security incident. And let's see. Let's see, this person get shadow banned? Yeah, this person shadow banned on Reddit. I'll have to deal with that later. That sucks. Okay. User Rhythm of ETH is a duder number 68. Writes, the Kiln postmortem. All right. The malicious transaction changed the withdrawal authority of the Solana stakes. Only if the existing withdrawal authority of the stake account provided in the post call held stake balances above 150,000 SOL. Leaked GitHub credentials and tokens. This is now Rhythm of ETH talking. Leaked GitHub credentials and token led to an exfiltration of back-end API keys, which led to funds stolen for one Kiln client. This rightfully forced them to rotate all keys out of rightful security concerns. I'd feel bad about the employee that leaked the API key, but I'm sure he tried to vibe code at this point. And then also the issue was not on Ethereum as a chain, but on the cloud infrastructure of Kiln being compromised. The moral of the story, use permissionless staking. Okay, whatever. Good stuff.
I mean, to their credit, I'm glad that they did the responsible thing and rotated all the keys, right?
Yes.
Has created huge market movements. I'm sure whoever was responsible for that had a very bad day. Kiln's not having a good time just in general as an org because of this. So I'm glad they just bit the bullet and did the responsible thing. Also, they dumped it all into the withdrawal queue at the same time, right? Maybe they could have staged it over several months and tried to hide the thing, right? But instead they're just like, this is very transparent. We're doing this. And that's cost them some yield because all the ETH that was waiting in the withdrawal queue is not earning yield staking, right?
Yeah,
so
that's how that works.
They basically zeroed their yield for a while when that happened, which I'm sure has cost them millions and millions of dollars to their customers.
I think if I was their customer, I'd want to have my coins back. So that's good. They are making things right, but it's coming at a what's the word? Opportunity cost loss, I guess. So, yeah. Thank you for that.
Integrity sometimes does that.
You know what? Integrity will make these people rebound. They might have to rebrand, but they'll rebound. I mean, good people don't fail forever. You know? Okay. Okay. User No Scratch 3795 shares their experience with normies in crypto. Okay, No Scratch. Ooh, this is a duder number one. This is a duder number one on the weekly Doots.
I love it when a plan comes
Got a fresh
together.
one, boys.
Got a fresh one, boys. Let's go. Let's go. I found all these sound effects. I love them. Makes me laugh. Anyway, congrats on making the show there. No Scratch 3795. Says, I'd like to write something about mass adoption. I asked a few people in my company about cryptocurrencies. The answers were more than sobering. 95% of those surveyed are not familiar with ETH. However, 70 to 80% have at least heard of Bitcoin, but I estimate 99% have no idea how crypto works. People are afraid of self-custody, are afraid or don't know how to register on an exchange. Note, people have no problem with banks, but as soon as the word exchange comes up, they become uncertain. They don't know what a wallet is. And when it comes to a word paraphrase, even the last ones decide not to buy because it's too complicated. The worst thing is that even though crypto has demonstrably risen so much and the forecasts are good, very few of the people I surveyed want to invest in crypto because they have no confidence in the asset. Why? Yes, there are countless press articles from the past about fraud and pyramid schemes and crime, and that's exactly what's stuck in everyone's minds. In addition, there are no educational initiatives on how to deal with cryptocurrencies, how to acquire them, or etc. You have to teach yourself everything, and most people are just not willing or even able to do so. I think all the crypto foundations that exist and have a lot of money should use it to promote and educate people about crypto. Otherwise, mass adoption will not happen anytime soon. And the entire user environment needs to be made much, much simpler. I know everyone here in the sub says it's easy, but honestly, the average consumer actually finds it difficult and complicated.
I don't think a lot of people in the sub actually say it's easy, for one.
I agree.
Like key management is not easy. Wallet management is not easy. The process of approving and then transacting with a smart contract is not easy. Most of the people that even have invested in crypto and own crypto don't have a single nonce.
I don't
just mean Ethereum. I mean like XRP, Bitcoin, whatever. Most people holding Bitcoin, even if they actually bought like BTC on Robinhood or something, they don't have a single nonce, right? So most of them aren't doing self-custody. Most of them aren't using the chain. They have never set up a wallet. They've never managed a private key. That's all very, much too daunting for them. And I mean, the phrase goes, the most bullish thing for Ethereum is to be understood. Ethereum is not only not understood, it's not even it's not even recognized. It's not even a word and a meme that's stuck in their head, even to say like there's something wrong with it. They're just not aware of it. So it's very hard to believe that the market is rationally pricing in, I don't know, all the growth that we're seeing. Stable coins are up like 50% year to date, right? Tokenized equities are up about 500% year to date. BlackRock's Biddle Fund is up about 500% year to date. Like we're seeing growth, we're seeing signs of adoption left, right, and center. And it's hard to believe that that's being priced in because it's not even like no one's even aware of it, right? The people that seem to be aware of it are the institutions that are doing it, and they're the ones buying. And meanwhile, we have Web3 absolutely paper handing this, right? Handing over millions and millions of ETH in supply, seemingly without a fight, right? So, BitMiner's probably going to be able to acquire that 5% for much less than they expected, right? Asbet somewhere going to be able to try and acquire that 5% for much less than they expected. And it's coming eventually. If I wrote about this, I think we missed the Doots one day, actually, because I had a long comment on this. But BitMiner is trying to get at to a market cap where they'd be included in a bunch of the large cap indexes like the Russell 1000. That is scheduled for rebalancing in June, basically selecting who's in and who's out in that top 1000. But when you get to that type of scale, you start getting bids from like sovereign wealth funds. Again, not retail, right? Right now the bid is institutional, but it'll be coming for sovereign wealth funds in 6 months to a year. It still won't be coming from retail, right? People will be their money will be on Ethereum, and they'll have no idea, right? Because of DeFi mullet type stuff, right?
Yeah.
So the bank will take their money if we get the right regulation through, and they will take their money and deposit it in DeFi in some managed insured position and carry a bunch more profit home to their shareholders. So people will be taking all the crypto risk with their money without knowing it.
Yep.
And just giving all that profit to the bank.
Yep.
Because they can't be bothered to learn.
They can't be bothered to learn. And Logri, to your point, how many times? I mean, the number one most basic plain Jane complaint is the user interface sucks. Like they complain about wallets. Like the customer facing stuff is
of course it's
hard.
true. So you click on the website, and then this separate pop-up that kind of looks like a scam kind of pops up, and then or the side window that's like totally like that's not how anything in any bank or Web2 interface works, right? Because the wallet is responsible for some generic thing about like managing and estimating the amount of gas and whatnot that has nothing to do with the application that's calling it, right? The application that's calling is just like, hey, I got an RPC call, right? So it says like, here's the thing I want you to go and sign with your private key. It hands that off to the wallet. So the wallet has nothing to do with the front end, which is not, people don't understand that. They have no idea what to make of this thing that suddenly pops up on the right-hand side.
Yep.
And then what is it? The gas, what is this fee? What is it denominated in? Where does it go? How do I know that this thing is safe, that I'm interacting with it? Because I've been told of all these dangers. It is a bad UX, right? And then, okay, you want to go and trade something. First, you sign something. You're like, okay, why didn't it trade? Then you go, another thing is popping up. Well, what's this thing? What did I sign the first time? Right? First time was an approval. The second time's the swap. But like, what is an approval? How do you explain that to normies? Why we have to do an approval as opposed to just execute the trade? Why is ETH the asset special and all the ERC20s have to do an approval? Why can't it just work like ETH? These are questions that we don't have good answers to. Also, so I just wanted to invest some stable coins. What is why am I if I wanted to invest in a savings account, I'd just give people the money, right? Why do I suddenly need ETH? We could fix a lot of these things with account abstraction, right? I think players like PistachioFi and their wallet do that in a very good way, where they just pay for the transaction for you.
Shout out.
Right. So we have people working on kind of making a more Web2 experience, but they do so basically by completely bypassing the wallet layer. Completely bypassing the wallet layer, so that Pistachio will manage the transaction and the gas management and all that stuff and just pay for your gas for you. And you just hand them USDC via credit card or via ACH, and they just earn interest on it. And you don't have to ask too many questions on how. You can get a credit card off it. You don't have to ask too many questions on how. That's the only way we're going to get a bunch of retailers to be able to go to the Google Play Store and have them be able to just transfer money like they just as easy as they would to Robinhood, get better rates, and use it for basically basic banking services. That would make people understand crypto, but MetaMask is never going to do that. Interacting directly on chain is never going to be viable for probably 75% of people, right? Even the people that are using crypto for like in Argentina and whatnot, many of them are just using Binance. They're literally doing Binance to Binance transfers. So they have Tether in a Binance account, and they use the Web2 interface on Binance to send to other addresses on Binance. And when it doesn't need to leave the Binance exchange, because guess what? There's no gas, it doesn't hit the chain, then it's free to transfer because it's just a database move, right?
Yep.
So it doesn't hit the chain at all. So they're not using Web3 in any sense. They don't necessarily have their crypto wallet or crypto wallet app, any of that. They're just accessing dollars via stablecoins. That is great for Binance,
Yeah.
but it's not crypto. It's not the cypherpunk, movement we had hoped for. The UX for crypto is legitimately scary and off-putting and raises way too many questions, and it feels unsafe. And anyone that already has their hackles raised because of all the scams that are known and been publicized widely is, of course, very off-put by that. You have to really a more technical audience is the only thing fit for the current interfaces that we have, like a Rappi wallet or a MetaMask or something, right? It's just, as much as I try to make it approachable, if you follow like my weakest link post to do key security, you can probably work through it if you're determined. But like, my mom is not going to be determined enough to work through that ever, right? The idea of downloading an encryption program to create an asymmetric, encryption decryption key is never going to happen for her, right? So I know that there is a new cohort of wallet type experiences. Things like Argent Web Wallet are in the works. Things like Pistachio are a different angle on that. We have account abstraction coming at an Ethereum wide level with paymasters to handle the actual alleviate the need for ETH in most people's wallets, right? Handle all the gassing type of concerns. I know that this is in the works, but it's not widely adopted yet. Hell, it's not even, we need an EIP for some of these things. So it's in the meantime, what is happening is institutions are here and they understand ETH better every month, and they're buying it. And retail is capitulating from just 8 years of holding this. And, I've seen way too many, even big names, just be like, well, I guess L2's were parasitic because the ETH price didn't go up, I'm out, right? And that's really sad to see.
Right.
That just means we didn't get it done in terms of getting the account abstraction, improving the UX. We didn't get that done in time as an ecosystem. As to why, where did we invest the VC money? What the EF do? Whose fault is it? Blah, blah, blah. I don't really care, right? But we didn't get it done in time. And so now we're faced with basically institutions are going to provide the UX for the customers, and they're going to take 90% of the benefits. And that's still a net positive for humanity, but it sure would have been better.
It should have been better. Yeah.
Yeah. Been able to sell custody and get that profit for themselves.
I mean, even people that are just mildly exposed to crypto couldn't look at an interaction and determine whether it was centralized or decentralized, because oftentimes it overlaps, and then like the marketing talking points, it's like, we'll see where this all ends up. But yeah, good stuff, man. Appreciate your input on that. We got to get the normies figuring this out. It's now 10 years old for Ethereum, all right. User CryptoWow Currency explains why it is important to have a slow validator entry queue. And user E2353 explains why there hasn't been any official push to changing the entry and exit times. CryptoWow Currency is in our top 10 list at 127, and E2353 is a Deuter 53. Interesting. 53 on the list this week. CryptoWow Currency says if we set the speed too high, the weak subjectivity window shrinks, and there's links to ethereum.org. The smaller the weak subjectivity window, the less time a validator can be offline without potentially needing to rely on human intervention to catch back up with the canonical chain. The extreme of this is Solana, where there's a chain issue. Everyone needs to come together in a Discord channel and agree on a shared checkpoint to reboot the chain form.
Trollolol.
It's all trade-offs. I'll just add that it doesn't make any sense to have a different rate limit for when the queue is versus small versus when the queue is large, because the security properties are proportional to the fastest rate that can ever occur. User 2353 replies, the churn rate was limited on purpose to 8 validators equals 256 ETH. Back in the DNEB network upgrade, CEIP 7514, to slow down the rate of the new validators joining the network. The original design allowed for faster churn rates, both entry and exit at higher validator counts. Why was this change made? Well, back then, core devs were worried about the stability of the network at higher validator counts, such as 2 million plus. Since then, a lot of improvements have landed, so I presume network stability is no longer the primary concern. I think today it's just a question of no one is seeing a good reason to allow for a faster churn rate. We don't need more validators on the network. And at least I personally don't mind the slow exits either, because becoming an Ethereum validator was always designed to be a long-term commitment. So why fret over a few weeks? I like it. I agree. Super Fizz. Super Fizz. Super Fizz. Do I have a good sound effect for a Super Fizz? I don't know if I do. I have an applause button here. I got a Leroy Jenkins button. October 10th was a bloodbath. That's the only way to describe it, Super Fizz says. Like a lot of other people, I thought about it all night. And here's what I want to tell you. Don't be deterred. Don't give up. But if what happened yesterday made you want to fold, your strategy might need some adjustment. If you really believe Ethereum is an inferior technology that will eventually fail, well, then I encourage you to sell what you hold gracefully and move to a more sound investment. But if you believe that Ethereum is a wise long-term investment and you recognize October 10th as a political and strategic move by market makers, yeah, I think that's probably on point.
We have pizzas, we have 300 hamburgers, many French fries.
Well, then I need you to be smarter than them. Keep some low ball orders open all the time. Keep some stables on reserve all the time. Cash out a little when you feel giddy about the price. The truth is, I don't give a shit about markets, but I do care about decentralized technology. And that means empowering a lot of diverse individuals to build and maintain market positions and participate with the network in lots of ways, such as making transitions or transactions, self-custody, running nodes, staking, engaging in the community, etc. The politicians and market makers, they don't give a single flying beep about you. All right? They don't. They are the enemy. They orchestrate these events to shake cheap coins from the tree. They'll even dump hard into a crash so they can amplify it. I think you know why. They are greedy and manipulative and hell-bent on making more money at any cost, even the cost of your well-being and sanity. Make no mistake, crashes are a primary tool that industry uses to consolidate power and control. In a thriving and unregulated market, market makers will shake the hell out of trees just to get you to give up your position so they can be stronger. I'm telling you this so you can stop caving to their will, so you can be a strong, formidable opponent instead of a scared retail investor. You do not have to be weak. And you do not have to be scared, because you know what your opponent is doing, and they obviously, absolutely do not hold your best interest. It's not a pep talk. It's not a pep talk. And I'm not telling you to have diamond hands. I am saying that I believe that the ultimate success of this technology is built on deep decentralization. And that means educating the people I care about on the tactics of those who would piss on us for their own benefit. It's very good. And you are stronger than you think you are. That is Super Fizz, number one on our leaderboard for this week. User Muscus11 shares a tale.
Sounds like a pep talk to me.
Yeah, it does. It's good old-fashioned Super Fizz pep talk for sure. I love it. Yesterday, Muscus11 shares a tale of caution about using leverage. A Deuter number 25. Yesterday, I somewhat smugly shared my thoughts on how to survive this market, especially with the upcoming weeks, which might get crazy. Today, I want to double down on why you should never use leverage, full stop, in a market as volatile as crypto. And I will do it by sharing my own experience. So I was always more of a holder than a trader. But back in 2017-18, MakerDAO was shiny and new. Oh, was it ever? I got it.
Yeah.
It was so beautiful. The first time you could use leverage decentrally, fully non-custodially on-chain. I got excited by the concept and I wanted to try it out, but of course I told myself I would play it ultra safe. Ether had just done a wild 10x run in autumn 2017, all the way up to $1,400 per ETH. Then the market crashed 70%, recovered a bit, and fell again to around $400 in the summer of 2018. With the prices down 70% from the top and 6 to 7 months into a bear market, everyone figured this must be the double bottom. That's when I told myself, let's go. And I opened up a MakerDAO position with what I thought was a huge safety margin. I would have been fine with another 60% drop. Liquidation would only happen around $150 per ETH. But no, ETH dropped another 50% to around $200. That's when I decided to double down. I mean, come on. Another 50% from where I entered with leverage. Now 85% from the top. The market had to turn, right? Wrong again. In November 2018, it fell another 50%. I would have survived if he had stayed above $100. I didn't want to deploy more capital, so I just let the position ride, hoping I would get lucky and avoid liquidation around $80. Wrong again. ETH flushed to the low of $80, and I got liquidated. Over the next 6 months, the market climbed back to $300. By then, I was done with leverage for good. But just for the record, before the 2020 bull run even began, ETH dipped below $100 twice more. Now, that was a time when things were probably simpler. Today, we have decentralized perpetual platforms with massive liquidity, layered on top of a political and regulatory environment that seems to have no issue with front-running insider trading. Probably even being part of the game itself.
We have pizzas.
So anyway, why would anyone in their right mind use leverage in this market? There you go. That's well said. I almost got liquidated also. And that was the last time I did leverage. And that also was on MakerDAO. And that sucked. That was bad. Dr. Lambo McMoontard coming back. Shares his 8-year journey with us, and he's a Duder number 8. So many coincidences with the numbers today. All right, Dr. Lambo McMoontard. I'm coming up on my 8-year ETH anniversary in about a week. First buy was on Coinbase for $2,000. I got something like 6.7 ETH for that. It wasn't my last buy, and I managed to hold on to 97% of everything over the years. I lost some on Ether Delta buying dumb shit back in 2018. It's crazy how much this space has changed since those days, some for the worse, but most for the better. To celebrate, I put together my first validator recently, and I'll have it up and running when the time seems right. I don't want to round trip my bags again, but I'm not selling at these prices. Besides, my future will be fine even if I lost it all, so I might as well just stake and stack, as we used to say. Perhaps one day when we really will get to 10K, and if not, I still did great, and I've made peace with that. There's no real point in this message other than sharing the journey with fellow Ethereans who will appreciate it for what it is. I'm excited to lend just a little extra compute to the network, and I'm glad I'm doing it as a solo validator. Try to keep your spirits up and adapt to these conditions in whatever way serves you and your family best. And remember, money isn't everything. Good stuff. Good stuff. Gotta love it. Time mends all things. Keep in there. All right. Harag keeps us in the loop with the Fusaka on the old test net. And he's a Duder 271, number 2, is he number 2 on the leaderboard? Harag keeps us in the loop. Sepolia testnet just got its Fusaka upgrade. Everything seems to work fine, and we are finalizing. Participation seems to have dropped by 10 to 20%, which indicates that some teams forgot to update their clients, as usual, on testnets. Get it together, people. But they will upgrade them pretty soon, I guess. Seems to be mostly Obol, SSV, and Aragon missing blocks. Yesterday, the Haleshki testnet also had its BPO2 fork, where the number of blobs got increased 14 to 21, 14 being the target, 21 being the max. This also went through without a hitch. Currently on mainnet, we have a blob target maximum of 6 and 9. Looks like we are one step closer to mainnet upgrade in December, probably, and a good increase of blob space a few weeks afterwards. Ethereum is scaling. User Rhythm of ETH. This is a double doot for the week. A double doot for the week on our friend Rhythm of ETH. Asks a good question about Ethereum ZKVM. That would be the zero knowledge virtual machine. Is that right, chat? Jamie, can you look that up? Future, ZKVM Future, and user Harog and user SM3GH34D shares their thoughts. Okay, Rhythm of ETH. Question on ZKVM based on recent Justin Drake posts on X. What happens if Ethereum swaps to proof generation plus proof validation structure when it comes to incentives for decentralization? I feel like this would take the block building centralization issues we currently face and apply them to the prover pool, which will be significantly smaller than our current re-execution based validator pool. In terms of incentives, unless protocol rewards continue to compensate attesters and proposers that don't overtilt to provers, it should be okay. But I have the feeling this won't be the case. My gut feeling is that provers will absorb most of the protocol rewards on consensus, and rightfully so, as verification will become very lightweight. But the barrier of entry to run a prover setup will be too high for it not to become a centralization vector. Harog replies, I do not see it the same as you. As far as I understand, there are a few different jobs that need to be done in the future. There is the block building, and that's done by sophisticated actors trying to build the best block. That's not too different from now. Then there is block proposing, which is done by validators, same as now. After the block is proposed, it needs to be proven. In my understanding, provers have until the next slot to prove it. And then as a last step comes the validation of the proof and attestation to the proposed block. I do not see the incentive structure to change drastically. The validators are the ones which have their assets on the line to attest to blocks and get the monopoly on proposing the block. That is why the handful of block builders bribe validators to the max to get their blocks proposed. As long as there is some competition, this works and will in the future. For the provers, it is similar. There will most probably be a handful of actors doing the proving and competing against each other to get their proof in. I have not seen anything about how the provers will get compensated exactly, but purely from the proof generation cost, they will not get a lot. According to ethproofs.org, it currently costs an average of $0.1 to create a proof. That would be 10 cents if you're doing the metric system. And there will still be a lot of improvements, such as cost reductions. And that, let me go back. That could be a typo. Maybe they meant to say 1 cent. I don't know. Somewhere between 1 cent and 10 cents there. Being able to run the proof generation on a handful of consumer GPUs is important to be able to participate. Not everyone will have them at home, but might be able to rent them from the many peer-to-peer GPU marketplaces, which interestingly are much cheaper than anything you get from the hyperscalers. So in my view, we are on a good path for ZK provers, not affecting the decentralization of the network in any meaningful way. There also already are prover markets for ZK rollups, which I guess are a good playground to look at different incentive structures to get things resilient for mainnet. If you're interested, there is a ZK podcast about prover markets. They first talk about the ZK prover space in general before going into the specific company. And you can find that. That link is at dailydoots.com, and I think I can throw it on the chat over here. I don't know if it's clickable to all of you people watching on Twitch and on Discord and on the YouTubes, but I put it in there anyway. And then further along this conversation, user SM3GH34D says, your centralization concerns are shared by some core devs also. Harag gives a good explanation of the best case scenario, but there are also a lot of unknowns regarding proving incentives, centralization, and prover client diversity. It is easy to imagine that there will be a small cadre of provers running the cheapest configuration possible, similar to how most blocks today are built by only a few block builders, such as Beaver and Titan. Work that is really hard, expensive, or operationally complex tends to favor optimizing down to a very few players. There are likely to be real client diversity issues when there is a significant cost associated with proving execution. The incentive is to minimize cost and use the fastest and cheapest client. I am heads down working on a Besu ZKVM guest program, and I'm keeping an open mind, but I am sympathetic to a lot of the misgivings and concerns. It is still really early. A lot of details are to be determined, including incentives and actual proving costs, etc. And at this point, it is still wayfinding exercise, and a lot of devs are taking a wait and see approach. Well, there you go, ladies and gentlemen. Thanks again to Noah Bortnick from Carpathian Capital for hanging out with us today. Stick around after the live stream if you want to on Discord. Actually, I'm going to probably shut the stage down as soon as we get off this call because I'm supposed to go to the apple orchard. I got family stuff going on, and we got good weather, and now's the time. And if you guys want to hang out on Discord, check out the daily general discussion on Discord, but also on Reddit or Ethereum. That's where all of our content comes from. It comes from the EV Mavericks and the wider R Ethereum community. Make Reddit genuinely excellent, all right? Hope you guys stop by sometime, say hello. On behalf of R Ethereum and the EV Mavericks DAO Discord, my name is JT.